Good afternoon, everyone. I'm Kishor Tilokani, director at FinAlyzer, and I'm really pleased to be in this session with all of you. Since this morning, I've learned a lot from a wide, experienced CFO community. I may be the black sheep in the audience, being one of the technology guys within the finance community, and it's my pleasure and also my passion. What Muskan was saying, what's individual's passion is about. So when I was thinking about a career path, finance was always on the top. Technology happened by the peer pressure and the community. And last 25 years, I've been working with the technology firm. I have worked with banking, financial, insurance firms. So it's a big combo of technology and finance that has led me here. Also, looking through the topic, leading through the storm. Now, I've been observing throughout this morning, we have been hearing various types of storms are now the CFOs, the co-pilots, the co-chairs have been facing. We name it the COVID storm, the geopolitical storm that we are hearing for the last a few hours, the compliance storm, which has been becoming more and more tighter, more and more deeper. We also have seen challenges around the talent, availability of talent. People are complaining, culture, people are complaining. And the new storm, which everyone is talking about, is the Trump storm, right? It's the new Lagan, what Sriram said. There's a new Lagan 2 picture has come. It looks like a new movie has come. So this made me recall a very recent incident, correlated to the topic. And also apt on when I was going in an elevator in my building, there were two little girls. One was around 5 years, 6 years, and the other companion was about 8 years. They had to go to a floor. They were alone in the lift. I said, you need to have a parent or some senior to go along, because I'd go and leave you home. They were discussing among themselves. One small girl said, or the bigger girl said to the small girl, there was the tsunami in Japan. And the little girl asked me, Uncle, what is tsunami? Before I could answer that, the older girl responded saying that, you don't know what is a tsunami? When the water goes this high and it goes above your head, that's called a tsunami. So all these made me reflect that the co-chairs are facing through a lot of tsunamis, and we are going to talk about some of these experiences, what you have faced, how you have come out through, share the best practices with our esteemed audience. If time permits, we may take a few questions as well. So I will start. My first, Mr. Dave is not there, Naresh. Both are not there. Okay. So sorry, I have to do a name recall. Okay, both are not there. So let me go to my second question. Asim, now when there is a crisis, you as a co-chair, you as a co-pilot is facing the internal and the external world. who are the various stakeholders? Who are the various stakeholders you typically engage? How do you manage their expectations, especially during the times of turbulence, especially during the high pressure zones you are going through?
Yeah, thanks, Kishor. And good evening, everyone. Yes, we as finance leaders are always having challenges every day. Every day we think today nothing will happen, but the first thing we reach at is something is already happened. So, yes, first of all, in the crisis, according to my experience, first of all, accept that there is a crisis. Because normally when anything bad happens, there are some people in the room where the ego always takes up that no, there is no crisis in the room, or there is actually no crisis happening. And there are other people in the room who makes it so panicky that, oh God, everything bad has happened. So I think to manage stakeholders, we first of all have to, so in the storm, whenever the tornado happens, normally the eye of the storm is the place where it is most calm. And we as a finance leaders, we as finance leadership, I think finance plays that function, that to first of all, tell everybody that what actually is the crisis happening. The second point is obviously, we as finance leaders, we have to tell them what exactly is the truth happening. Normally what happens that whenever these incidents happens, the source of informations are different. There are many people speaking different things. So we as finance guys first have to catch the right guy. Who is the right guy? Or who is the expert who has handled this, or who is handling this is currently in other parts of the world. And then we should have one spokesperson or one source of information. What that will do is that will ease out the board. That will ease out the stakeholders who are present. That yes, there is only one source of information coming. There is one constant information coming. And that is the truth information which is coming to everyone. Thirdly, what we also need to make sure is that whenever these incidents happen, for example, COVID has happened, or Trump tariffs are happening, or geopolitical tensions are happening, we first of all always need to communicate with empathy. I think that is where many of the finance leadership goes wrong, because emotions always plays better than the facts. While I will come on the facts aspect as well, you should always gain trust in the boardroom that yes, something has got wrong, and we all as a team are trying to make it good. So the moment that empathy comes, the acceptance from various people starts coming in. And the fact is another aspect which plays a very important role. That whatever facts are there, it has to be clearly communicated. It has to be, the facts has to be presented without any emotions attached to it. The facts have to be presented without any egos attached to it. There has to be a clear communication and presentation of facts. And as soon as the fact is presented, believe me, 50% of the problem or challenge is already solved. Because first of all, the correct fact is being presented. Second of all, every day or every hour, I would say, the source of information is one. So that keeps a lot of stability. So point what I'm trying to say is that we should at all times, whatever be the situation, avoid panic. Because that is a feeling which creates a lot of restlessness in the entire organization. And to finish with Kishor, what experience I have felt is that wherever the stakeholder management comes, communication is very important. So like we always go with 3 aspects of communication. There has to be clarity, there has to be credibility, but we always forget the third C, which is the compassionate, or how clearly you communicate is also important. See, the biggest challenge in communication is it is the illusion which we think it has already taken place. So people think that some of them knows already what has happened. No, nobody knows nothing. I think that should be the mindset. It has to be clear. It has to be 100% truth, whether somebody likes or not. And we as finance guys everybody looks at it that we are always telling the truth to the stakeholders.
Asim, thank you. I would have a few more questions on specific to communication, but I would want to have other panelists also bring their experience on this. Maybe for Raju, you wanted to add. Please go ahead. Please go ahead.
So very nicely you have put in the various aspects of the crisis management. I just want to add on or build upon two more aspects whereby you very rightly pointed out that first, in a crisis, whenever we are there are a group of individuals, then half of them either looks too positive or they are too optimistic that they don't accept that crisis are there, or then there are other set of people who are too negative and then they create or tend to move towards panic and then suggest you to do everything possible under the sun. So what I just want to add upon here is while managing a crisis in the action orientation, or when you are preparing the list of actions, you have to prepare, you have to be not to be too optimistic that fine, this is a crisis, it will be resolved on its own and nothing bad is going to happen. At the same time, you can't be too pessimistic that every hell is going to lose and therefore you will be never able to recover. So striking the balance, preparing an action plan which has mitigation effect covering all the scenarios whereby it could turn out to be a positive, it could turn out to be a negative, it could be midway as well, is very important aspect which I personally have felt and experienced and done in my stints. We would explain you later during the course of this conversation. Yeah.
Thank you. Asim, you mentioned about the Lighthouse. I want to go to Mayank about one question. Is Mayank, the CFO is often seen as a lighthouse. The way you were saying it's a storm, tornado, the CFO is supposed to anchor the ship to the safe harbor, right? And there are many industry experiences. Any specific experience or situation you have been through where you could let the audience know what happened, what were the actions you had to pull in, challenges that you faced, and are there any learnings from that which we could take forward?
Sure. Good afternoon, everyone. I think, as you said, CFO is a lighthouse, or somebody said CFO is a co-pilot. So that's, I think, is very true. CFO is a co-pilot to the CEO. Now, what happens is, many times in organizations, people look at things from their prism, because everybody has their own KPIs, everybody has their own targets, and the vision is limited to that. How, as a CFO, you have to look at a holistic picture, how things can impact, not just for the short term. Because somebody, say, being a salesperson, I might be looking at achieving my number to get the incentive for this year. I'm not worried about what happens 5 years down the line or 3 years down the line, or what even happens to the company P&L, because my target is linked to just getting my sales number done or my orders number done. So that's how you need to balance. So one of the example I'll quote is, okay, the business has been making losses continuously. Now, you have to look at different aspects, because there is no one reason for it. You have a problem with your costing. Now, for costing, you have to work along with your supply chain and the plant team. You have also a problem with your collection or AR, because you end up losing a lot of money at the final collection stage, because while you may show for the year performance very good, but finally you are not able to recover. Then you have a problem with your even the tender stage as well, because both ways, like when you compare, so from a sales guy's perspective, he would be always willing to give you a very aggressive price and get as many orders as possible because his incentive comes from sales. But now from the say tendering team or say plant person's perspective, they would be willing to go very conservative on cost to cover up all possible risks. So at the end they don't fail and they probably deliver something below the plant cost, and they can show, okay, we have done very good job. But now risks are if you go very aggressive on pricing and maybe you keep getting orders, but if you are not able to deliver them, the profit is not going to come in your P&Ls. And on the other side, if you give very conservative cost, you will not get business because customer is going to compare not just because you are giving it, he is not going to give you order, because customer will compare with what competition is giving. So we had to balance all these aspects and then take it through the storm, I would say, because anything you can't mess. You have to take care of your order book because your plant has to run, otherwise you will have under absorption. You have to deliver also at the targeted costing. Then you have to keep the employee morale also high because the sales team also can't be left demotivated that they are continuously losing business, so their incentives are gone for a toss. And at the end you have to collect, and in all this you have to carry your management or the board also along, because sometimes boards or even the investors, they may get worried looking at the short-term impacts, because any such actions you take may have some impacts in the short term, maybe few quarters or a couple of years. But you have to communicate your story clearly and convince the people, because that's the key, because it's be it for investors, be it for board members or even the employees of the company. Because if people are not convinced, your communication is not clear, that's going to create confusion, and then the results may not go as expected. Thank you.
You mentioned about various pivoting factors or influencers, right? It could be your liquidity constraints, it could be your employees, it could be your business partners, it could be profitability, it could be the board decisions. Now, in a scenario where you have to juggle with too many parameters, it becomes very challenging, right? And not easy. How do you take a decision, Mayank, on I want to prioritize, A over B, right? And what dilemma you go through or the team goes through taking decisions that, I will prioritize something over the other, because it may not be possible to meet every pivot that you would like to solve.
So I think so there are certain things which are red lines, like which and whatever happens you can't negotiate or can't compromise on. Like in current time when in discussions with America, we are saying, okay, India's red line is agri, dairy and all these things, we can't compromise. Okay, so say compliance or ethics. These are some things, again, with some organizations may not be, but may not have that, but as CFOs, I think we have to be very clear, compliance or ethics part is non-negotiable. Now, beyond that, obviously you can't, you have to balance the short term versus long term. You can't say, okay, my short term completely, I don't worry about the sales or profit for the quarter or couple of quarters. That's also, but you have to balance it in a way that it's not very drastic. So it should not happen that suddenly your performance in a quarter is going down and you say, okay, now 3 quarters my performance, don't worry about performance, look at the future. Because that's also not going, because how will the investors get confidence that, okay, you 3 quarters or 4 quarters, you are going completely down and then suddenly you will get up. So you have to balance short term versus long term, and that's where our capabilities get tested, because both have their own importance. Especially if when you are a listed company, then this short term also becomes all the more important, because in a private sector, private company, you may still manage because you have limited stakeholders. But when you are a public company, you have investors, you have analysts, and a lot of things playing at play.
Thank you, Mayank. Ajay, the next one is for you. What I'm doing is a cross question because some of the panelists are not here. So what will be...
That's going to be another example of crisis management.
Yeah. So we would like to hear from you about an example that you have faced as a crisis, and how did your team and you ran into it. The second part of the question on this would be, in terms of managing stakeholders, there would be a certain transparency is needed. Sometimes, to one stakeholder, you can't be completely transparent, and the other stakeholders, you need to be transparent. I think there was one of the panelists talking about in the earlier panel as well, what you can communicate, what you can't. How do you manage that, thin line? So there are two parts to this question. One about the challenge and managing the transparency in communication.
So first of all, I would say that unfortunately I had just 3 or 4 because it's not fortunate to have experience of crisis, because really when they happen, you really need to be into a different mindset. And I think the best way to handle crisis is learn from a nature. We would have seen certain documentaries whereby there is an animal who has fallen in a trench, and then how he is trying to come out of it. And that gives you a message, try. I think in my stint, wherever there are some 3 or 4 situations which I have managed, I'll try to share to give you some perspective of what went into from my side to solve on those crises. In organizations, Forex volatility at times leads to crisis. So in order to build up the perspective, I had at that point of time was heading treasury function or corporate finance function at Tata Power, whereby the FX loans were close to about $2 billion. And for the Forex loan, there are 2 parts. One is the interest rate, another is the fluctuation to foreign exchange. And that was year 2016. And at that point of time, before my joining, the company took a call that they took a hedge on our interest rate, complete hedge, which means LIBOR at somewhere 4.14. LIBOR never saw even a single basis point above that. And it came crashing down to 0.25, but they hedged it after paying a premium of some 2%, which is about 6%. And Forex, they left it open, $2 billion. And from 47, it went up to 66, and there was a huge crisis. At a budgeted cost of about 9%, I was heading the coastal Gujarat power plant, 4,000 megawatt power plant over there. So at a budgeted cost of about 9 to 9.5% kind of a term loans, if you were to take a decision to completely hedge out and mitigate your risk, the cost was coming to about 18%, which would have translated to roughly a loss of more than 3,000, 4,000 crores. So that was kind of crisis. So, and then what was important at that point of a time is, as you know, I touched upon, there is a divide between the optimistic and the pessimistic. The pessimistic guys saw rupee moving on to 99, crossing hundreds, and worst is going to happen. And the optimistic can't say anything because they could have never predicted. So in order to manage that crisis, and if you were to hedge that point of time, the Forex premiums were also about 9%. Means if you have to take a hedge for another balance period of 5 years, you will shell out another 45%. I mean, at 66, if you take forward, it's close to 100. So the first question which my executive director of finance asked me is, on what basis you are saying that we should not hedge? What if rupee touches 100? I said, then if rupee touches 100, Ajay Wagdi will be the last person you will remember about. you would have 100 of issues in the economy if rupee touches 100. So that was the first line which built perspective, and I learned it from some of the renowned consultants, because the idea was if you are preparing for your worst, then you have given all the upsides which is possible. And at times these kind of events are very recently, when there was a movement in the yen, the market crashed and it was such a huge losses. And then we were just doing a study to see when was the last this kind of movement has happened. It was just a year before and nothing great happened at that point of a time. So in the internal discussions, we were saying, how can the market react so badly to this one? And similar was these kind of events. At times the market tends to overreact, and then you have to hold on to your senses. And therefore we started devising a strategy that you have to plan for all the three options. That what if this is the worst, it will get resolved on its own, or what if it doesn't resolve, or what is the middle way. And then when took a strategy, we adopted strategies so that, we are safeguarded on all sides. The lesson learned were, don't get perturbed in such kind of a situations and take decisions that yes, this is the worst and let's do everything possible under the sun. This is a line, which I learned about 27 years back. We were doing some negotiation in China in lunch. During lunch time, I asked my boss, I think we are going to lose this negotiation. What would we say? This was some buying 100 megawatt power plant, old power plant from China. And this guy relaxing, taking a sutta, very simply said, Ajay, remember in life one line. He said, what? Heaven is not going to fall. And all through 27 years, I have been using that line to manage things in crisis, that heaven is not going to fall. And at times at the top of the COVID, we were seeing, this is the end of the world. It didn't happen. We are here again. So those were the thoughts behind, and we adopted strategies. And at the end of 2.5 years, we took some forwards to cover, let's say, just 10%. That yes, we are taking action. Even at 66, we take a 5-year hedge at 99, but it was just 10%. And then we left options. Then we covered when it came down. We took another option, strategies, making some plans. And at the end of 1.5 years or 2 years, the cost came back to the same budgeted level of 9%, 10%. There was a cycle, the LIBOR coming from 6 to 25, it again went back to 2.5 or 3 levels. The forward premium crashed from 9% to 2% at one point of time. So that was a huge learning and to do a crisis management. And another important is, do take help of the expert in the industry, because they have seen these trends as be it the board of directors, but if they don't have the expert knowledge of the subject, they tend to overreact, and therefore we pulled on consultants to have meet these directors and influence their decision making. I lost on the second point.
I was coming there. Just because heavens are not going to fall, we have
He's here.
Dave coming in. Welcome, Dave. Still, I am having that question in my mind. How do I take a call? Where to draw a line in terms of transparency? Because you came back from China,
Yeah.
right? Someone is expecting an answer. I don't know whether that was the right instance or not to ask, but where do I draw a line of transparency? How much to share, how much not to share? Again, heavens will not fall, whatever I say, or there's a different method to
So
it.
there, our Indian advertisements have told us, जोर का झटका धीरे से लगाओ. So this is again a real example. I was in Tata Power as head of investor relations, and days were at that, I'm talking of 2015. So it was a listed company with 20,000 crore of a market turnover, but the days for thermal were not rosy. I mean, it was a gloomy picture all outside, and then there used to be concerns about that the power purchase agreements, what we are having with the the discoms, etc., whether they are going to be renewed or not. So here the strategy what we adopted is keeping mum will not yield results, and therefore we started divulging that kind of a risk. We first presented as a risk that here are the few of our revenues which might not be available from, and first of all, just to give them an information that these revenues are certain up to X date, post which there is a renewal which is required. And then we slowly started messaging that these are the risks, these may not get renewed at a similar rate, or these may not be the kind of the profitability which is expected out of it. So, I mean, it's clearly would be a bad strategy to just keep mum about the crisis. You can't, because otherwise, you would never be trusted again. But then, yes, divulging that information in a way that if you are leaving it to the, some kind of wisdom of the recipient, because you don't know whether he is optimistic or pessimistic. So, an optimistic guy would take it in a lighter side of things, but a pessimistic would say, no, things are not going to come back. So, the strategy what we adopted is do it, but slowly. Yeah.
Thank you. Your point of crisis, risk leads me to Ashish. Ashish is a leader in the insurance segment. Ashish, the CFOs or industries struggle with various risks today, right? And these comes in various forms. What solutions do insurance organizations, from a risk and crisis management, you believe organizations should look at? Is there a framework around it that you could talk about?
Thanks, Kishor. So basically, I heard about a tsunami and then the eye in the storm. Okay, so like we cannot prevent the tsunami, but what we do is help clients manage or mitigate their risk when there's actually a tsunami which is coming. And we as consultant or as broker act as an eye at the time of the storm. So there are various, you can say, risk, because as of now what we are talking about is more of financial risk, the trading risk, the trading exposures or the currency risks that are actually there. But there are various solutions which come into the play, because what I see in the financial sector, there is a lot of exposure when it comes to, you can say, because there are a lot of transactions which are happening. So I give you an example for, we have been saying that there are a lot of deepfakes related crime cases which are coming up. And some of the corporates definitely would have seen it over a period of time. Similarly, we see there were a lot of vendor frauds 2 to 3 years back in India, wherein you would have seen phishing attacks, wherein a mail would have come from a vendor, you will feel that this is a mail ID of the vendor, but ultimately you realize that, okay, this was something who actually phished. You ultimately ended up changing the vendor details in your system or the SAP system which you're managing, and you made the payment in the right essence. But then you realize that, okay, this is a fraud which has actually happened and companies have suffered loss. I give a class example of a deep fake. It recently happened in US, wherein the finance team of the company transferred some around $25 million to a fake account because they actually felt they're actually dealing with the CEO. And the CEO is planning to buy a company over there. And it's a hush-hush deal. So how do you protect yourself for this? So again, there are solutions which are there in insurance, which do provide certain kinds of protection. So there is a crime policy. Again, these are bespoke solutions. So again, there are products which are available over the counter, but we don't advise our clients. It is generally advisable to have these bespoke solution stitched via broker so that they can protect you against this risk. Especially in the CFO fraternity, another risk which happens, because I keep on dealing, a couple of my friends are also in the CXO suite. What I keep on hearing, they're signing a lot of documents. So they're worried that, okay, if I'm signing these documents, tomorrow the regulator can come to me. There can be issues related to, you can say, some investigation which might happen. How do you protect yourself? Again, there are solutions. It's a simple policy which all of us would have heard about, the DNOs, Direct and Officer. But it does provide you protection for investigation costs. So if tomorrow the regulator comes to you, you can hire a legal expert to help you out so that he can actually protect or give you adequate protection. Similarly, we have seen a lot of activism coming from shareholders. We were talking about listing a while back in the previous panel. So when you get listed, the shareholders can definitely go to court if something happens or there's a derivative action. So how do you manage this risk? Again, this is something which is again covered in the DNO, but again, has to be stitched, has to be covered under the policy. If you go to the insurance company, they will try to minimize the exposure they want to carry. That is where people like us who are there in the fraternity, who understand the business, who have been doing this for quite long, they can actually guide the client as a consultant for them. Third is obviously the EPLI exposures, that is employment. A lot of companies I was hearing are actually global now. So we are not talking about Indian exposures. So we have a lot of foreign nationals who are now our employees. If I talk about US, there are an empty number of claim examples which keep on happening in US, wherein employee can go to court for harassment. They can go for wrongful termination. A lot of retrenchment is happening. We keep on hearing TCS firing 12,000 people, X and Y company firing so much. There are various acts to protect against such exposure. So again, your DNO have to be structured in a way that these exposures are passed on to the policies. And the third, what important product I wanted to discuss is what we have been hearing about cyber. In an interconnected world, in this IoT of space that we are living in, wherein I understand a lot of our colleagues are here from the manufacturing setup, but now there is hardly any difference between the OT layers and the IT layers in the corporates. Both of the layers are actually talking. What happens if there's a cyber breach? You might have personally identifiable information, you might have corporate information which might be there, you might suffer a business interruption, okay, because you are not able to do your data recoveries in time. Your business, you might have to take a backseat because you are not able to track your inventory, production. So we have seen a number of examples in manufacturing setup itself, wherein clients have actually had to stop the production because there is a cyber breach which has actually happened. And these are huge costs. And they come with the regulatory penalties as well. India DPDP Act has come into play. As soon as the final wordings are there in the domain, I think it will be a huge exposure. We are talking about penalties to the tune of 250 CR, which is a huge amount. If I talk about GDPR, if you have European exposure, they talk about penalties to the tune of, you can say, the revenue of the company. So they limit it to 2 to 3% of the revenue of the company, which can be huge in certain cases. So those are the risks that we're talking about. So one part is obviously the intrinsic risk, which the colleagues talked about, but we try and provide certain solutions which help you in, so that you concentrate on your business more. Your business has a continuity. You have a clear vision on your P&L and the balance sheet. You don't have to worry about, okay, this risk mitigation has been taken care of. There are adequate covers which are there. So that is where you can say proper buying needs to happen.
Ashish, a connected question here. The various examples you gave from a risk part. Now, in an organization, risk is a wider function, right? And some of the examples of the risk you gave, how does this integrate with the overall organization risk management, and how the organizations should plan their strategy better for integration of this with the risk you have suggested? Is there some suggestion or an advice you want to give to the audience?
Sure, Kishor. That's a valid question. So lately what we have started seeing is companies do have very well-defined risk management strategies in place, and the insurance strategies are generally dovetailing into those strategies. So that is something which is there in place, but what we see a difference in corporate to corporate is the maturity and effectiveness of the strategy dovetailing into other. So that is something which has to be taken care of, needs to be addressed. And there are two solutions that come to my mind, how this can be done better. One is right now insurance has a, you can say, function. The procurement of insurance is more of kind of an L1 approach, which traditionally the government tenders also follow. What my suggestions to clients is try and do a kind of a QCBS, wherein you are valuing the quality as well as the cost part of it. So you give some value to the technical aspects, where what exactly technical aspect is, whether the insurance company that you are parking your risk has the technical ability to manage such exposures. Because when we talk about cyber, we talk about crime, there is a huge infrastructure which an insurance company or the broker needs to have to manage such kind of claims. Otherwise, they are not adding any value to your portfolio. So that is something which becomes very important. So that's the reason the procurement needs to move from the L1 approach to a QCBS approach. That is one part. And second, what my thing will be, like an important question which happens, because what we are talking about here is a liability policy, Kishor. So what are the limits? Because limits have to be decided by the client. There is no hard and fast rule that this is the limit that you need to buy. So you need to benchmark against your peers that what your peers are buying. Plus second, in a lot of cases, there are now solutions available which provide you risk modeling. So basis certain questions that we basically ask our client, there are risk models which are run, which are based on probabilistic scenarios, which give you the kind of limit that you should be taking in order to protect certain probabilistic exposures. So that gives an idea that, okay, the solutions which I'm buying are appropriate. That gives an idea to the board as well, because a lot of time board might ask, okay, what is the cyber limit we are taking? Whether we are adequately protected or not. And most of the time, these questions are actually coming to the CFO, because the risk management in most of the companies nowadays are dovetailing into the CFO function. So that is where this becomes very critical for the financial community and the CFO community at large.
I'm able to resonate what you recently mentioned. Just about a week back, we had an investment in our organization, FinAlyzer, from a Japanese client. And one of the areas of CPs was all the insurances, and I was really grappling with what is the risk coverage I need from a general liability, from a director's liability, from a technology, cyber liability, and all, and there was no framework available, to be honest. And that's where I believe many organizations would need a lot of support from insurance advisors. Maybe from other organizations who are mature in the curve. Muskan, one more question, because I need to have Dev engaged in this meeting as well, in this panel discussion. Dev, I am going to repeat a question for you. As in Philips, or maybe any other example you can give, what's been the most difficult challenge you have faced as a CFO? How did you manage it? The underlying currents that you had to face, and are there any specific models or frameworks available to come out of this crisis?
Thanks, and extremely sorry that I was running a bit late. I underestimated the traffic. But I think you have a question which takes me back to a phase of COVID. Philips, for better understanding, Philips is a health tech company. We deal with healthcare, and all our customers are majorly the hospitals. So I remember there are multiple such events I have come across, but one thing which always keeps on top of my mind is, Kishor, during the COVID, it was one phase where I think the volatility and unpredictable situation, I think all of us have gone through, certainly completely uncertain those days. And one of our product portfolio, which was not a very accretive to the profit, but a small portfolio of product which suddenly has picked pace. Every other person in this country wanted to have one. I think many of you know what it is. So in fact, it went to such an extent that people started queuing up in front of some of the employees' house, thinking that they are hoarding it. So because it was not a very accretive and not that a big volume business, suddenly there was a lot of pressure saying that, what are you going to do on the pricing of it? Because this is the right time that where you can take a decision, because the demands have suddenly gone up. So among all these things, as such, the supplies was not there, and then you come across a lot of pressure from the regulator side. First, the ecosystem really helped a lot, saying that, how you get this first to India. The government was really great, thinking, giving us 4 chartered flights completely to bring this on a emergency basis. while the decision was like how to go to market and what should the realization, we realized that okay, the situation was like substantially high demand and not profit. Then how we should decide, and the entire thing was coming towards me, and where I realized that okay, how should I take a call, and we never increased the price. In fact, we went ahead and gave a newspaper advertisement saying that okay, this is our MRP which remains as is, and basis that what happens, the consequence is that the government came back and said that okay, if you slash the custom duty, what are you going to do? We said that okay, we'll pass on. And then it happened, and after 7 days we went ahead and we passed on. No, we reduced the custom duty, and we gave another advertisement and said that okay, now this is the revised price. And after 7 days again it came that okay, we reduced the GST, we waive off the GST, and actually we went ahead and again put it another advertisement saying that this is the revised price. Now among all these things, the only request we said the government that don't ask the weights and measure guy team to come back after us, because we are pasting a A4 size printed paper on the box because there was no such stickers and all those things were available. So that was the situation, and what was going in our mind is that it is deeply personal, correct? And it is, and at the end of the day, there is a life which was, involved in it. Now, if you'll ask me what framework we followed, the framework was simple, saying that first, you have to be anchored around the purpose of the organization, where we work. We are not here for making any money out of speculation. So it's not a very short term. We really look long term. The second thing which we looked is that the lives impacted, because that's our purpose, that to improve the life of 2.5 billion people by 2030. That's our commitment, and we thought that okay, this is the right time that okay, we should look at the patient and the life impacted. The third thing what we looked is that how far it is in line with our strategy, saying that okay, it is a long-term strategy. If it is fitting into our strategy, then on a long run it may give back, and in a short run it may make you a loss, but it's okay to go ahead. And that's the third thing. The fourth thing and the final thing which what I looked at is the quality of data versus the quality of judgment. Such situations you never had. You never have enough data to qualify your decision. So only thing is that the institutional wisdom which should play a role, and that's exactly what we did. And because of all these things today, after the COVID, everything went down, and what we got back is the reputation what we got. We were the first people to get a free entry to the regulator to decide how we decide on a price regulations in the industry. So that's what I feel that this is one of the things which always remains on top of my mind, that very difficult situation with very emotional situation, how you take a decision, and the purpose is something which really guides you there.
Again, Dev, citing this particular example, in such a situation where you mentioned about emotions playing role, the team could go in different thoughts could go in different directions. Now, as an executive presence, how you believe this was managed? How a CFO could bring stability, calmness in the times of uncertainty and continuous changing decisions?
So, in such situations, when things looks blurred, actually, you zoom out. Actually, not you should further try to zoom in. That's exactly what I said. That when you have not enough data, okay, and the data is lagging actually. Okay, after 5 months, I might have a better trend to visualize, but 5 months after, you really don't know where the world will be. So in such situation, actually, I feel that okay, you zoom out and say that okay, what you would have done in a normal situation. Okay, so that's the long-term view we need to see, rather than taking a
very small, short-term or speculative decision. That's exactly what we did. And no, I think of late, it was highly appreciated within the organization and with the stakeholders also. So hope it answers your question.
Thank you. Audience, we are out of time. With this, we would like to thank the panelists for sharing their experiences. Hope we are able to connect with some of these in your own journeys. Thank you, everyone.